Most XRP holders are exhausted right now, tired of watching the price not move, tired of the headlines making them second guess what they hold. Even when David Schwartz himself makes a comment on Twitter, the community panics because everyone is already on edge. And that is what a bear season does to people. It wears them down emotionally until they stop trusting what they know and start reacting to every piece of noise that comes across their screen. And I promise you, by the end of this, you will see a bear season very differently. The reason why is because this is the season where you should be building your largest positions in the entire cycle. And the wealth is built in the buy. And so I'm going to help you to know exactly how you should be positioning yourself to take advantage of this opportunity. And I think by the end of this, you're going to understand that you should have a different posture in this season. I'm going to make it make sense to you. Now, I'm Camila Stevenson, and around here we talk wealth. This is only for educational purposes, not financial advice. Always do your own research. Like the video and subscribe if you have not already, and share it with someone who needs to hear this. And let me know in the comments, are you still buying in this bear season or are you finished? Okay. I would like to know what you are doing in this market. Now, here's the first thing I want you to understand because it will change everything else that I talk about. Most people are evaluating XRP using the wrong framework. They are looking at the price chart every single day and watching the candles and reading the news and reacting to every comment from every person in this space. And then they're making decisions about what they hold based on what the price did that week. That framework makes sense for a company. It makes zero sense for infrastructure. Let me explain the difference because I think you need to understand this a little more clear so that you can make better decisions in the midst of the chaos that happens week to week. A company is evaluated on quarterly earnings, on growth metrics, on whether the leadership is executing well, on whether the competitors are eating into the market share. The price of the stock reflects the market's opinion about all of those different things at any given moment. Stock prices move every single day because the opinion about the company moves every day. Infrastructure is different. Infrastructure is not evaluated on opinion. It's evaluated on one thing: does it work at scale? Think about the early electric grid for a moment. Throughout the 1880s and 1890s, engineers were laying the wires that would eventually power American homes. While they were doing that work, most homes still ran on gas lamps. The price of electric infrastructure stocks at the time was very volatile. It went up, it went down. There were months and years where it looked like the technology was failing because adoption was slow and the public did not understand what was being built. Nobody at the time stood up and said the electric grid is underperforming. The framework for that statement just did not exist because infrastructure is not evaluated based on whether the public has caught up to it yet. Infrastructure is evaluated on whether the technology works and whether the institutions building on it trust it enough to keep building. Same patterns with railroads, same patterns with the telephone system, same pattern with the early internet. Every major infrastructure technology in modern history went through a period where the surface evaluation looked one way and the actual reality underneath looked completely different. XRP is in that same position right now. The institutions building on the XRP ledger are not making decisions based on the price chart. They're making decisions based on whether the technology solves a real problem at institutional scale. And the answer they keep coming back to is absolutely yes. So when you wake up in the morning and you check the XRP price and it hasn't moved, here's what I need you to remember. That price reflects one thing: the current state of liquidity in the broader market. It does not reflect what is actually being built. It does not reflect institutional adoption. It does not reflect the technology working. It reflects how much capital is flowing into risk assets right now in a tight liquidity environment. The price and the value are two different things during a bear season. They diverge, they move apart from one another. The price reflects current sentiment, the value reflects what is being built underneath. And eventually, those two things have to converge again. They always do. The question is which side of the divergence you are positioned on when the convergence happens. The people who understand this and smart money who understands this is not panicking when David Schwartz makes a comment on Twitter. They're not selling because somebody on YouTube made a bearish prediction. And a lot of people are selling because of that. They are not getting shaken out because the price has been flat for 60 days. They understand that the noise on the surface is not the same as the building underneath. And they're using the noise to accumulate while everybody else is reacting to it. It's actually a strategy if you really pay attention. That is the difference between being in a bear season and being shaken out by a bear season. Both groups are holding the same asset during the same period. One group ends the cycle with significantly more of it than they started, and the other group ends the cycle wishing they had not sold during the moments of maximum frustration. Now, I want to redefine the bear season for you because I think most people are using the term wrong. And the way you define something determines how you respond to it. So let me give you the right definition first, and then we can talk about what to do with it. A bear season in XRP right now is not a thesis breakdown. The thesis is intact. The institutions are still building. The infrastructure is still being deployed. The technology is still working better than the alternatives, and nothing about that has changed. What you're experiencing right now is a liquidity contraction. That is a completely different thing. A liquidity contraction means there is less capital flowing into risk assets across the entire market, not just XRP. Bitcoin has also been chopping. Even if it goes up, down, it's all chopping. Most altcoins are sitting at lower levels than people expected by now. Even gold and silver has had a pullback right now. And that's not because the thesis of any of those assets broke. It's because liquidity in the broader macro environment got tight and capital pulled back from risk. When liquidity contracts, prices reflect the cost of liquidity in the system, not the value of the asset. Those are two different things. The reason this matters is because liquidity cycles always turn. Tight liquidity does not stay tight forever. The Fed is about to transition leadership, and depending on when you're watching this video, he might already be there. But rate cuts are coming. The balance sheet conversation is starting. The summer liquidity wave is being telegraphed by every analyst paying attention to macro. When the wave hits, the assets that were suppressed during the contraction reprice quickly, not gradually, but quickly. And that doesn't mean that the price won't drop more and then go up, or it doesn't mean that it won't go up and then come back and then go back up, or it could chop sideways for longer than we want. But everything will eventually come back to its fundamental price, right? So the question is more about what you do during the contraction. And here's where the smart money and the average retail investor go in completely different directions. The average retail investor sees the price down, feels frustrated, watches the news, hears predictions like XRP is going below $1 in 5 years, gets shaken, and then start wondering if they should reduce their position. Some of them will sell, some of them will just stop adding, and some of them will just sit there feeling bad about what they hold. The smart money does the opposite. They see the price down. They understand it is liquidity, not thesis. They know the cycle turns, and they accumulate aggressively during the exact period the public is feeling the worst about the asset. This is not theory. The data is showing you exactly what's happening underneath the surface right now. Over 4 billion XRP has come off centralized exchanges since October. 7 billion came off of February alone. And remember, I keep saying that the order book on the exchanges is sitting at the thinnest level since 2021. Somebody is buying that XRP and moving it into private wallets. That somebody is not the average retail investor. That somebody is sophisticated capital that has the information and the time horizon to know exactly what they are doing. When XRP eventually moves, the supply available to buy at lower prices is going to be dramatically smaller than people realize, because the people accumulating right now are not selling into the next move. They are holding for the bigger move that comes after. That creates what people in market structure call a supply shock. Less supply available, more demand chasing it. price moves quickly to find equilibrium. That is the window I'm talking about. The window is open right now while the public is panicking. The window is open while the news cycle creates uncertainty, and the window is open while the price stays in this range that frustrates everybody. Once liquidity returns and the institutional adoption story becomes the consensus story, the window closes. The smart money already accumulated, the price already moved, the opportunity already passed, and maybe some of them will be selling into where you want to buy because you're FOMOing in. Most XRP holders are going to miss this window because they are too tired to see it for what it is. They have been holding for years. They've watched the price disappoint them repeatedly, and they've heard many predictions and so many delays that they cannot tell the signal from the noise anymore. So they react to the noise. They sell during the lowest points. They stop accumulating during the cheapest periods. They check out emotionally during the exact moments when conviction matters most. And this is why bear seasons transfer wealth. They are designed to, not by design as in conspiracy, but by design as in the natural function of the markets. Every bear season in every asset class throughout history has done the same thing. The people with the longest time horizon and the most conviction take positions from the people who get tired and shake out. The cycle will end after that, and the asset eventually moves, and the wealth transfer is permanent. So when you find yourself getting frustrated about the price or feeling shaken when somebody you respect makes a comment on social media or wondering if you should reduce your position, I want you to ask yourself one question. Which group are you trying to be in? The group that uses the bear season to position, or the group that gets position away from during the bear season? There is no third option. You are in one or the other based on what you do during this exact window. And I feel bad for a lot of the hype that's come in this market because there are just some utility coins that do not need to be hyped. Honestly, all you have to do is know the fundamentals, get educated, understand the utility of some of these coins, and find out what institutional adoption looks like pertaining that particular coin. And I think if you just do that, you dollar cost average, and you have a long-term plan in place, then you won't get shaken out as much. But everybody wants to chase the hype. Everybody wants to feel a dopamine rush. And if you can just set all of that aside and think like an investor, I think you'll do well in this market. Now, the bottom line is very simple. The bear season is the test. It tests whether you understand what you own. If you understand it, the bear season is the opportunity of the cycle. If you don't understand it, the bear season is the punishment that takes your position from you and gives it to somebody who does understand. The window is open right now, but I can tell you it's not going to be forever. It's not going to be for years. For this period before the catalyst hit, before liquidity returns, before the consensus story shifts, right now is the position. Right now is the accumulation. Right now is the work. As a matter of fact, it's giving you time to work on yourself, to work on your structure, to work on your game plan, to work on your tax strategy. So this time is a blessing if you see it that way. It's all about how you see things. When you change the way you look at something, what you look at starts to change. And so you definitely want to have the right perspective in this. Now, I do want to say, if you do want to make sure your position is being built in the right structure during this window, then I do have the link to iTrust Capital. I keep a portion of my crypto inside of a Roth IRA because when the cycle turns and the appreciation hits, I do want every dollar of that gain to stay mine. A lot of people are going to sell, and I understand that. There's nothing wrong with taking profits as long as you have, to me, your long-term position in place that can really generate wealth for you. It's okay to take profits at certain levels, but just understand you are going to have taxes on that capital gain. And so you definitely want to have a strategy in place that can kind of hedge and offset some of the taxes that you're going to wind up owing. And you need a strategy for wealth preservation. Too many people are just trying to make money, and there's nothing wrong with that. I love cash flow, but it's not going to mean anything if you don't have the right structure to protect you long term, and you don't have another strategy that can also save you on taxes. It doesn't make sense for every strategy that you have to include taxes in on that. have some strategies that can save you on taxes. And again, this is why I do keep some of mine in a Roth IRA. Also, remember that you can do a backdoor Roth as well. So you can pay taxes now and then invest into assets that will have an upside that you believe is going to do well over the term. And if you believe that there is an asymmetry move at some point in the future, trust me, it makes sense to add this to part of your strategy. So I wanted to share that. And I want to let you know that there is a $100 funding bonus when you sign up, and you can take that money and you can also invest it in assets as well. And they are including in the summer stocks and ETFs. So you'll be able to invest in digital assets or digital commodities, and then also physical commodities like silver and gold, backed by physical silver and gold, and then also stocks and ETFs, all in one tax-free account. So again, the link is in the description. And if you do want further help, I do have my one-on-ones available. They are limited. My schedule is limited right now. But if you want help with your game plan, how to allocate, and you have deeper questions about how to structure everything, how to have your LLC set up, and how to start structuring your estate and build yourself into financial freedom, then that is what my one-on-one calls are for. And my community is also available so you can have accountability. I'm with you there, coaching you every step of the way. And I'm telling you, people are in there getting their entire game plan together. We also help with mindset because we know that that is a huge part of your financial growth and financial intelligence as well. So the links are in the description for that. Also, go ahead and remember to let me know if you feel like this is a season of opportunity or you feel like it's a problem for you. Let me know. I know some people are very frustrated, and even if they are holding, they're still frustrated. And I just want to see where you are on this. Go ahead and like the video, subscribe if you have not already. Just look at the video and see if you're subscribed. Some people watch and they do not know that they're still not subscribed. Do me that favor. And if you're feeling extra nice, you can go ahead and hype the video as well and share it with someone else who needs to hear this. And as always, I want you to stay wise, stay wealthy, and I'll see you in the next video.